and welcome to ET Now Startup Central, India's first and only daily show dedicated to startups and entrepreneurship. I'm Chandra Srikanth, joining you live from India's startup capital, Bangalore, and we have a power-packed show lined up for you over the next 20 minutes.
And I'm Krishna Kumar, coming to you live from ET Now's Mumbai studios. First up, a check on all that's making headlines here at ET Now Startup Central. Flipkart's usually reticent co-founder and chairman Sachin Bansal takes on a range of questions today on funding, valuation, GST and the impact of Brexit. Sachin is not worried about the recent markdowns in valuations, says Flipkart doesn't need funding and that the Brexit has further created uncertainty in a down cycle. And in our special segment, Valley Direct, we do have Venky Ganesan of Menlo Ventures joining us to talk about the Brexit impact on startup funding, Brexit, that is Raghuram Rajan's exit, and lots more. You don't want to miss that one. Moving on, fashion portal Myntra's biannual sale kicks off this weekend, and we are being joined now by its CEO Ananth Narayanan to take us through why this is significant and the contribution that Myntra expects towards its revenues. Axis Bank launches the Thought Factory, its startup accelerator program to drive innovation in the fintech space. We'll get you more details on that as well on the show.
And Krishna, we kick it off with one of the biggest voices as far as Indian e-commerce is concerned, the usually reticent founder and chairman of Flipkart, Sachin Bansal, took on a range of questions from us today, ranging from fundraising to valuation, to the Amazon effect, to the new GST bill, and even Brexit. Now, the biggest news point as far as that is concerned is that he's not really bogged down by the recent markdowns and valuation that Flipkart has seen. And he also says that Flipkart doesn't need a round of fundraising now. That's certainly news to a lot of people. And finally, he's also spoken about how the new GST bill, some provisions will be very difficult for the likes of Flipkart to implement. Listen in to all the questions that Sachin Bansal took from ET Now.
We believe that the TDS process that has been recommended in the bill about holding tax of withholding some tax and paying that on behalf of the sellers, that I think is something that is almost will be very difficult for us to implement in practice. It's definitely become more external focused, but I'm very much involved in the day-to-day operations as well, and I am also looking after mentoring of senior leaders in the company, as well as creating a positive ecosystem around Flipkart outside and some key partnerships that you will hopefully see in the few days. Overall, these are financial cycles that happen on a regular basis, and I think we are going through a down cycle, and Brexit has also not helped.
Right.
And there are some other risks that are now we are seeing EU in a little bit of confusion, and some shuffle may happen over there. I hope not, but if so I think the whole world internet sector itself is going through a little bit of down cycle, but as the positive cycles don't last forever, the down cycles also don't last forever. So we are not looking to raise funds actively. We are well funded for a long period of time, so we don't need to raise any money. It's a constant effort. I mean, it's not that we have suddenly started focusing on efficiency. That will be not the, no company does that. I think there's a constant effort on efficiency and growth and all kinds of aspects. If you look at what happened with Uber, right, along with us, it was not just only Flipkart, it was a lot of internet companies around the world which were also went through that markdown. But with Uber, although they were marked down by the mutual funds, they raised money at a higher valuation than the previous round. So I don't think much about the markdowns. I think we should just focus on execution, keep our heads down, and keep serving our customers, and things will happen. We are seeing a very good growth in all categories. Mobile definitely has gone beyond other categories from a penetration point of view. 25 to 30% of all mobile phones sold in India are sold online. Other categories are at 1 or 2%. Right, so mobile has definitely gone, and of course as the base grows, there is a slowdown in the category. But if you look at overall from an e-commerce sector point of view, e-commerce is still at about 2% of shopping of India. This is nothing as compared to. There's a long way to go. The policy that was a clarification that was given, and we actually had a similar understanding of the clarification. So we were compliant earlier, and we continue to be compliant. We continue to explore revenue streams. We started the ads business. We had e-cart as a business. We started exploring.
How has that helped you, the spinning off of e-cart as well as advertising?
No, I think I can't share specific numbers, but it's doing pretty well.
Very candid Sachin Bansal there, Chandra, in India's Silicon Valley, Bengaluru. Time now for our special segment, Valley Direct, where we get you a VC voice straight from Silicon Valley in California. And today we have Venky Ganesan of Menlo Ventures joining us to talk about the impact of everything from Brexit to Rexit and lots more. Venky, thank you so much for taking time out to be with us here on ET Now Startup Central. Tell us, Brexit was the big international event over the weekend. How do you see that impact startup funding?
Well, I think you've got to separate out the impact between early stage venture capital and late stage. I think Brexit is a big geopolitical event, but its impact on early stage is very little. Because when you are a little company, your goal is just to get product market fit. However, late stage financings, the kind of big $50, $100 million financings, they're going to be affected because the global market is affected and we're going to have capital flows changed.
Venky, is there an India-specific impact that you can outline as well as a result of Brexit? You know, we heard out Sachin Bansal talking about how that creates a lot of uncertainty. So is there an India-specific impact that startups should know about?
I think for the most part, India is actually very well protected. If anything, India is probably one of the more attractive places in the world right now to put money. I think the biggest issue for India is going to be whether Brexit results in other countries in Europe thinking about leaving the euro, which then causes geopolitical stability, and that geopolitical instability will result in capital flows impacting India. But for now, I think India is probably in one of the best shapes.
Venky, you know, the other big event was, of course, SoftBank President Nikesh Arora's exit last week. It's certainly been the season of exits from Nikesh Arora to Lionel Messi. Now, he led much of SoftBank's investments here in India, and it also led other Japanese investors, you know, to follow SoftBank here in the subcontinent. How do you see his exit impacting sentiment as far as investors are concerned?
I think the Indian startup scene and the Indian internet scene is bigger than any one company or any one person. So I think the long-term opportunity in India remains intact, and I don't see a big impact on that. However, what SoftBank and Nikesh did was empowered Indian startups to grow big fast. And they were able to do that by bringing huge amounts of dollars into the ecosystem. I think that will be affected. And I think in the late stage financings, you're not going to see the huge amount of dollars coming in as you did before. And that is a bummer because I think the Indian startup scene was changed by SoftBank and Nikesh.
Venky, also take us through the overall impact that you've seen as far as funding is concerned. I mean, in the first quarter, we did see some pullback in investments, some caution. How has it really trended in the last 1 month in terms of the investments that startups have been attracting?
Venture funding is cyclical, and we are coming on a 5-year bull run where the funding has been always strong. I think we are going into a downturn, and the downturn probably started in Q4, and my sense is it'll accelerate a little bit towards this year. That's okay. Booms and busts are a natural part of the capitalistic cycle, but I definitely think we're in a downturn for the next 6 months to a year.
Venky, getting back to big events, you know, the big event in the Valley over the last few weeks was the Code Conference, where we saw the likes of Sundar Pichai, Jeff Bezos and Elon Musk talking. I wanted to understand what were your highlights, your takeaways from that conference.
So to me, I think there are a couple of things that are definitely coming through. One is this notion of machine learning and AI. I think we are very close to an inflection point where artificial intelligence and machine learning are going to have some huge impacts, huge positive impacts on society. I also think the other thing that's becoming clear is that the driverless car is a lot closer than people think. And of all the things that's going to impact society, transportation is on the top of the list. And the notion that we can have driverless cars is a game changer. We are obviously investors in Uber, so we have a perspective coming from that. And I would tell you that I think it's going to change transportation as we think about it.
Venky, we also see you reviewing this HBO sitcom Silicon Valley quite often. It's quite popular. Do you think the Indian ecosystem is ripe yet for a similar show? And does it have enough interesting characters going for it?
I think so. India is a very rich, interesting place, and if anything, India knows how to make great television and great cinema. I think that'd be a great version. I don't know if you have to call it Bangalore Valley or something else, but it'll be fantastic.
My goodness, how much fiction can mirror real life, Chandra and Venky. But Venky, actually I'm out of questions for you. But, just before you leave us, tell us any other trends that you want to throw light on from the Valley?
Well, this is a topic that's been covered a lot, but I think the exit of Raghuram Rajan is really disappointing. I think Rajan was one of the top RBI governors in India's history, and his presence and leadership really gave a lot of comfort to foreign investors. I think the way his exit has been handled by the BJP government is disappointing. Somehow I feel like this has been a self-goal. It's almost like we are doing a hit wicket to ourselves instead of celebrating people who come in and help us.
Ironic, isn't it, Venky, that, while Satya Nadella, Sundar Pichai are celebrated overseas, a global Indian like Raghuram Rajan, who, wanted to give back to his country, doesn't get the same treatment here.
Yeah, I don't know what it is, but I think we have a little too much of suspicion. I mean, instead of celebrating, Stanley Fischer, who was the governor, the head of the equivalent of the RBI in Israel, America recruited him back to be the vice chair of the Fed. What makes America great is its ability to absorb people from all over the world and make them American. We Indians, on the other hand, are not even willing to accept Indians who left India to go to America and bring and embrace them as Indians. I think that's a culture that we got to change. We got to take talent from all over the world and make sure they come to India to make India great again.
Venky, if the world needs to learn a few lessons from the Brexit, then India certainly needs to learn a few lessons on how to retain talent here with the Brexit. We hope that happens. But thank you so much for taking time out to be with us here on 8 Now South Central. Venky Ganesan of Menlo Ventures, ladies and gentlemen. Back to you in Chandra in Bengaluru.
Certainly helps us get all the perspective as far as Silicon Valley is concerned, Krishna. Silicon Valley too seems to be worried about Brexit. But moving on from that, we switch to fashion portal Myntra, which is kicking off its biannual sale this weekend. They call it the End of Reason sale, and we're joined by its CEO Ananth Narayanan on the show today to really take us through this. Ananth, thank you so much for joining us on 18 Now Startup Central. Your big sale is kicking off this weekend. What kind of expectations is really being built into this? And the kind of growth numbers that you expect as far as the sale is concerned?
Sure. So look, we're very excited about the End of Reason sale, right? I think this is, as you said, a biannual event. This is our 4th edition. We call it the End of Reason sale. It's a fashion event, which is like the end of season. We expect almost 20x the revenue that day, right? So this is going to be enormous for us. And the sale will run for Saturday and Sunday, 2nd and 3rd. We're doing some incredible stuff with the brands, partnering up with them. More than 2,000 brands will participate. And, we'll have sales for up to 80% off. So we're very excited. I think it's a great deal for customers. We also have enough supply chain capacity planned so that customers actually have a great experience when they shop with us. So the deliveries and the NPS, which is the way we measure consumer experience, doesn't suffer because of the sale.
All right, Ananth, this is Krishna here from 18 Hours Mumbai studios. You have some multiples, but give us actual numbers. You have crossed the $500 million mark in terms of revenues recently. Tell us, where do you see this heading? How many more landmarks can we see going forward?
Look, I mean, I'm hoping that, as I said, it's a 20x jump, so it's a big shift in baseline. I've talked to you before about this. We're going to try and get to $1 billion run rate this year, right? And I'm hoping that the sale actually allows us to get a big ramp up to that 1 billion, right? So I think it'll be a fairly large jump, because the way we think about these events is that they're actually a big consumer acquisition channel for us, right? So customers, a lot of first-time customers will come in. We expect more than 10 million people to actually come to our app those couple of days, right? So.
You mentioned first-time buyers, and how difficult is it going to be to lure them? Will this come at a cost of profitability? Take us through that.
Sure. So firstly, by the way, as you well know, Myntra is one of the few players that actually is on its path to profitability. We've been focused on it much before any government directive. So over the last 9 months, we've continued to focus on unit economics and how do we make the unit economics work, right? So that's point number one. Number two is, in reality, end of season sale is actually a fashion phenomenon. All the brands are actually participating in it because that's what they do. You go from spring, summer to autumn, winter, and you have a big sale in between so that you clear out your inventory, right? This is what the brands do. So the brands are the ones that are actually leading this with us, right? So we're absolutely compliant. What we're doing, which is different than what most offline people do, is offline end of season sales happen over 6 weeks. We're trying to make that happen in 2 days in a very Myntra-esque fashion, where we actually get huge scale and huge spike in 2 days, right? That's the big difference, right?
All right, Ananth, let's discuss the big story of the day, the 7th pay commission hike, which is expected to boost consumption as well. Tell us what broad consumption patterns that you witness, and how do you see it changing going forward?
Sure. So I think, look, one thing, there are two macro things that we're seeing, both of which I think are very helpful for Myntra. One is, by the way, I see lots more tier 2, tier 3 shopping that's going to happen. I think that continues to be a big trend. I think it's 55% of our revenue today and continues to climb. So I expect that there will be a lot of that comes in this sale. The other, by the way, is that I think just with the selection of brands that we have, I expect a lot of women consumers to keep coming again and again, right? I think we have some terrific brands that are there, right, in our portfolio. And I think that I expect to also actually see a scale up. So both, I think, tier 2, tier 3, as well as women, are the two big trends that I see, and I see that playing out in the sale.
Right. Ananth, you outlined how the recent norms with respect to discounts won't impact you. But finally, before we let you go, just want to know the recent shift that you made from app only to, launching your desktop again, relaunching your desktop again. How has that really helped you in terms of the traction that you're seeing on the Myntra side?
Yeah. No, I think, look, we are always going to be a mobile-first company. I think there's no doubt about that, right? The app channel is always going to be 80-85% of our revenue. So that's what we're seeing. Today, desktop is about 10% of our revenues. I expect it to become 15%. But I still find the dominant thing is mobile. India is a mobile market. We're not going to go away from that. Our app-only move helped us do that. I think the desktop move is helping us attract a certain segment of women consumers, people with multiple devices, all of that. I expect that to be about 10-15% of sales.
Thanks so much for that, Ananth, and we will catch up with you next week to really find out how the sale went and if you have met your targets. But moving on from that, Krishna, guess what? There's yet another accelerator in town. This time it's coming from Axis Bank, which has announced an innovation hub today. Where else but in Startup Capital, Bangalore. For this, they have tied up with Zone Startups India, and they will really look to mentor startups in the fintech space. So I guess if you're a startup in the fintech space, no better time than now, because a lot of accelerators popping up in that space, and the latest one being Axis Bank. Krishna.
All right, Chandra, time now for some other news from the global startup ecosystem. Apartment sharing startup Airbnb is in talks for a new round of funding that would value the company at $30 billion. Airbnb intends to use the financing to support new investments and growth opportunities. Airbnb had raised over $100 million in a round of funding late last year that valued the company at $25.5 billion. The San Francisco-based startup, which operates in nearly 200 countries, also secured a $1 billion debt facility in June from some big US banks to finance its expansion plans.
With that, we come to the final segment of the day, Krishna, and in keeping with the theme, the number we are fronting to you today is 1 crore. Believe it or not, that's the number of government employees, pensioners who will see a rise in pay as a result of the 7th Pay Commission recommendations coming into effect. The biggest takeaway from that is that it's going to lead to a big boost in consumption, and I'm sure e-commerce companies, online marketplaces will certainly hope that a chunk of that also happens online. I guess a new channel just opened up as far as these companies are concerned, Krishna.
Oh, absolutely, and I'm sure all of us should be happy because most of our folks will be benefiting thanks to that pensioners hike. Chandra, more than 50% of that 1 crore rupee number is a bunch of pensioners, and that's fantastic news for all of our folks. On that wonderful note, we wrap things up here on this edition of Startup Central. Thank you so much for watching, but don't go anywhere. Keep it to the ET now. Coming up next is Market Watch.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.